Hello, everybody. Welcome to this week's episode of the Debt Hotline. My name is Hannah with Team Solo. We're super excited about today's topic and think that it could be really helpful for a lot of our listeners and viewers. Today's topic is how to negotiate and settle debt with the IRS. And we're holding a question and answer session with tax relief expert named Jay Patrick, who is the Director of Client Solutions at Tax Relief Helpers. I wanted to read a little bit about Tax Relief Helpers for everyone watching and tell you a little bit about what they do there. So that being said, Tax Relief Helpers is a trusted tax resolution firm that's dedicated to helping individuals and small business owners navigate overwhelming tax debt with confidence. With deep expertise in working with the IRS and state tax authorities, the team at Tax Relief Helpers offers personalized strategies for resolving back taxes, preventing wage garnishments and liens, and negotiating affordable payment plans. Known for their integrity, transparency, and results-driven approach, Tax Relief Helpers empowers clients to reclaim financial peace of mind and move forward with clarity. Whether you owe $10,000 or more than $100,000, their team of tax professionals is here to help you every step of the way. So again, I'm joined tonight by special guest Jay Patrick. Again, he is the Director of Client Solutions at Tax Relief Helpers. Jay, would you take a moment to, introduce yourself, tell us how long you've been at Tax Relief Helpers, and maybe fill in any gaps that I might have missed in my explanation.
Absolutely. Well, thank you for having me on the podcast. I'm glad to be here. So I've been with Tax Relief Helpers since 2022, since we started. I've been in the industry for about 15 years, and I've worked for different tax resolution companies. And what makes Tax Relief Helpers stand out from the rest is the fact that we've taken basically the best of the industry as far as our resolution team, and we brought them here to create a top-tiered tax resolution service company.
So what do you think makes Tax Relief Helpers top tier, in your opinion?
I would say our tax attorneys, our enrolled agents, and our accountants as well. They have a cumulative experience in the industry for over 100 years, and they've dealt with every type of tax debt that you could think of.
So it sounds like it's the attorneys that really are like forming that expertise and helping people find resolutions and negotiate. Is that right?
Absolutely.
I love that. And what exactly do you do with your role as Director of Client Solutions? What's like an everyday kind of work day for you, like, Jay?
Well, when I come in, I always just check to make sure that there isn't any cases that need to be addressed, as far as whether that be revenue officer notifications, levy notifications. I'm always working with our team on the front end to make sure that we're holding up to the highest standards, especially in our industry, making sure that we go through these consultations with these prospective clients properly. So I basically have my hands full with every part of bringing on a client and going to the resolution aspect of it as well.
So it sounds like you help clients along the process, and you kind of speed the process up for them and help them with the flow. If they get stuck at any point in the process, you're there to support them. Is that right?
100%.
Awesome. And do you have any, like, I guess, personal experiences or, stories about tax relief or tax debt? Have you witnessed any crazy stories, or maybe had tax debt yourself? Like, what brought you to Tax Relief Helpers in the first place?
That's a great question. So what got me into this industry was I was raised by a single mother, right? So when I was a kid, she had to withdraw from her 401k early, and then she didn't withhold enough taxes at the end of the year. So then she incurred a balance. So from the youngest age that I can remember, seeing her deal with that, and I'm the youngest of three boys, that instilled something in me to make sure that, one, we could help every single client within reason, but also it gave me that drive to find other ways that people don't really usually know about.
So it sounds like, you maybe came from a household where debt was maybe a common topic or maybe like a common problem, and you wanted to kind of get out there and help people who are facing similar challenges find resolution.
Absolutely.
I love that. Well, that's a great story. Well, I guess, Jay, with that, I wanted to hop into some questions that we have since you are an expert in the tax relief space. It's totally related to what we do at Solo, and it's completely related to topics we typically discuss on the Debt Hotline. We at Solo, we help people who are dealing with debt, especially people who've been sued for debt. We help them respond to the lawsuits and resolve the case, and we also help them negotiate and settle their debt. So we wanted to talk a little bit tonight about how you can negotiate with the IRS to settle tax debt if you're in that position. For anybody watching and listening, the Debt Hotline is a free way that you can submit questions about debt and get answers from experts. Wanted to give a quick disclaimer that I am not an attorney. Jay, you're also not an attorney, correct?
No.
Okay, so since we are not attorneys, anything that we say or talk about in this episode is not considered legal advice or, legal representation. Watching this podcast does not form an attorney-client relationship. Again, we're not attorneys, but we are experts in the debt space, and so we wanted to share a little bit about our knowledge, answer some of your questions. And again, if you're watching the Debt Hotline or listening and you have your own questions about debt, you can call in to 801-613-8181 and leave your own question as a voicemail. And we will get to those questions every week when we host our live stream and do our podcast. So thanks everyone again for watching. With that being said, Jay, wanted to ask you the first question, which is, what happens if you ignore IRS tax debt?
Well, ignoring the IRS tax debt doesn't make it disappear. And it often makes things worse. Initially, the IRS will send notices, but if you don't respond, they can move forward with enforced collections, wage garnishments, bank levies, or even filing federal tax liens. It can spiral quickly if left unaddressed.
Yeah, and I think that that's a very common, topic in the debt space in general. Like, if you ignore a debt, it doesn't mean that it's going to go away. In fact, ignoring it could be in some cases the worst approach to take. And in the case of tax debt, what are some potential consequences that could happen for people who ignore the IRS when they're coming after them for tax debt?
Garnishing wages, freezing bank accounts, and then usually with the tax liens, all of that imposes it. In reality, it doesn't allow people to like either refinance their house or sell their properties. Typically they're going to be sending out a bunch of notifications prior to this. So if you're receiving a lot of these final intent to levy or CP 90s or LT 11s, then you should start to act on those, because when they state it and they send it out, they're going to be coming after any assets that you currently have, bank accounts, wages, and assets.
So you threw out a few technical terms there, Jay. Wanted to kind of break some of those down if you don't mind. You mentioned wage garnishment is a potential consequence of ignoring tax debt. You also mentioned levies. And I think there were a couple terms that I'm not familiar with, something about 11. Can you fill in the gaps for me? Maybe tell us what wage garnishment is and what a levy might look like if the IRS comes after you for those things.
Absolutely. So wage garnishment notification usually gets sent to your HR department if you're on a W-2 for a company. And then as soon as they get that, your HR department has to respond. So in essence, as soon as that's sent to them, they can garnish 25%, 50%. I've even seen cases where people are getting garnished 100% of their wages. And that's after multiple notifications about this garnishment order. Or if they do a levy, then they're going to submit this levy notification to your bank. The bank will send you a notification, and then the IRS will take all the funds out of it.
So the difference between wage garnishment and levy is just that the levy, they can take like a chunk of money all at once, whereas with a wage garnishment, they can take a percentage of your monthly income and put it towards your debt. Is that right?
Absolutely.
And that's crazy. You mentioned that you've seen cases where the IRS will garnish up to 100% of someone's paycheck.
Yep.
That's crazy. So, with other types of debt, like credit card debt, personal debt, consumer debt, I think the limit typically is about 25%. Jay, in your experience, I know you said you saw that rare case with the 100% wage garnishment, but in your experience, what's the typical percentage for wage garnishments for tax debt?
It all depends on the amount of the sources of income that you currently have. If it's one source of income, then it's usually going to be 25%. But if you have more than one source of income, then they can go up to 50, 75, even 100%.
Okay, so with a particular example you shared about 100%, maybe that person had multiple forms of income, and so garnishing their one paycheck at 100% wasn't meaning that they were losing all their money every month, right?
Well, in essence, for that example, it was a business owner who had put himself on W-2. So at that point in time, a revenue officer had come into the picture and started levying the entirety of his paycheck.
Okay. Wow. Well, craziness. Yeah. So I think the big takeaway we've got here is, if you owe tax debt to the IRS, it's a good idea to address it. Don't ignore it. The more time that you let go by without addressing the issue, probably the worse the consequence could end up being. And I think that a lot of times we kind of paint the IRS to be this big, like, evil entity or the enemy or whatever you want to call it. But I do think that there are individuals working at the IRS who are willing to work with you, figure out a solution, especially if you are dealing with other types of debts. I wanted to ask you, maybe if you could tell us, Jay, a little bit about the timeline, though, of wage garnishment and levies in relation to tax debt. At what point would the IRS usually enforce a wage garnishment or levy for non-payment?
That's usually after several notifications about the intent to levy or garnish your wages or seize your assets. Usually they give you a timeline when they're sending out, like I said, a CP90 or an LT11. These are specific letters that they're sending out to the clients who owe or the people who owe IRS debt. And at that point, they'll give you a deadline. If you don't respond within that deadline, then they could enforce that levy or the wage garnishment within a week, a day of that time frame. It just all depends on the severity of their debt to the IRS.
Okay, so would you say you mentioned the timeline is usually after several notifications and notices that they owe the debt. How long would you say? Is it usually like a week or 2 weeks or maybe a couple months?
Well, are you talking about after the last notification or with the buildup of the notifications?
Maybe after, like, the IRS sends the first notification. What's the timeline after they get the first notice that they owe this debt until maybe it leads to wage garnishment or a levy?
That could be anywhere from about 6 months to a year. Sometimes I've seen it as early as a month. Because I know there's several different scenarios that come into play, like the amount that you owe and the severity, the type of debt that you owe to the IRS as well. So in a broader spectrum, it's more usually about 6 months. I would say on average, if they send you that notice about having the balance, then and you haven't addressed it properly, then they're gonna send out another notice as far as their intent to try and collect those funds from you, and then they'll send out the final notice of intent to levy or garnish or seize your assets.
Gotcha. And on the topic of, the consequences of ignoring tax debt, I'm curious, like, what types of penalties or interest might accumulate over time on tax debt. Can the IRS charge interest on debt that you owe?
The IRS will always charge interest on the debt that you owe.
What kind of, like, what percentage are we talking?
I've seen anything as far as 2% to 10, 20%. It all depends on the case. In reality, it all depends on how much you actually owe to the IRS.
Gotcha. And on that topic, are there ever instances or examples where the IRS might settle for less if the debtor does have other debts or just isn't in a position to pay it off? Will the IRS ever settle for less and kind of maybe take a lump sum payment to forgive the rest?
Yes, there's several different relief programs, but the main three are usually it's an offer and compromise. These are very few and far in between, just because at that point in time, you would have to be in reality destitute or insolvent to state that you don't have the ability to pay that debt in full. And then there's also the installment agreement and a currently non-collectible. So there's several different ways that you can go about it. Every different situation, every different person might have to approach it differently.
Okay, so you mentioned 3 options: offer and compromise, or an installment agreement, or currently non-collectible. Could you tell us about each one of those? Let's start with offer and compromise.
So that's kind of like the scenario that you were just talking about, Hannah. It's more about, in reality, you offer them something that's less than, whether it be 20%, 30%, 40%, or 50%. Then you could submit that as a form 656, offer and compromise, to where you're going to submit that. Then you have to submit the financials as well to back it up. And then you have to submit a deposit for it at that point in time as well.
Does Tax Relief Helpers have any sort of documents available to the public, maybe free templates or anything like that, that could help someone who maybe is not in a position to hire an attorney? They can maybe fill that out themselves and submit it?
Yeah, I believe so. I would have to double check that, but I believe we do.
Gotcha. And your website is taxreliefhelpers.com. For our live audience, I'm going to go ahead and submit that in the chat. You guys can check that out if you feel so inclined. Let me pull up another link real fast here. Just give me one moment. Okay, so let's move on then to the next one. Jay, the next option that you could potentially use to negotiate with the IRS is an installment agreement. Can you tell us how that would work?
Yeah, so the installment agreements, it comes down to the 3 factors, just like the offer and compromise or the currently non-collectible. The IRS will operate off of assets, income, and expenses. So then you're going to have to fill out a form 433, which is a IRS financial document stating all of your assets, the bank accounts, credit cards, homes, whatever it may be, 401k, IRAs. And then they're going to look at not only your state, but your city allowable expenses to show what your disposable income is at the end of the month. And then they'll go based off of 33% of the allowable or the disposable income to go into an installment agreement.
You said 33% is usually the cutoff?
For the allowable expenses, or for the disposable income after the IRS standards allowable expenses.
Can you break that down a little further? Like, what exactly does that mean?
So there's a lot of people who say, oh, well, I have two car loans that I'm paying on, but it's a single person, and I have X, Y, and Z expenses. The IRS will only allow you to have a certain amount deductible for allowable expenses.
Gotcha. Okay. So it sounds like with the installment plan, like you're going to end up probably paying the same amount that you would have normally paid, but you just do it over time. Is that right?
You're going to be paying more because you're going to have penalties and interest that will accrue during that time frame.
So it's probably best to try to set up a payment plan before the interest happens, right?
Well, anytime you do file and you create a balance with the IRS, they're going to attach interest to it at any point in time.
At any point in time, even if you haven't been delinquent and you haven't missed any payments yet, you're still okay. Interesting. So maybe it's actually best to just pay it off all in a lump sum payment if you are in a position to do that then.
Yeah, and that's usually when people get their tax returns back, and if they do have a balance, they'll have the 4 payment vouchers with the accrued interest added to those payments already.
Gotcha. Okay, well, let's discuss the last option, which is currently not collectible status. Can you tell us a little bit about that and how someone could apply for that?
So let's use a business owner, for example, that has been greatly impacted recently by some circumstances. Then they would submit, again, the 433 document stating that they currently don't have the ability to pay for it. And then they could be put on a currently non-collectible. That is a temporary solution to the problem as well. So that would only be specific to that year. So as soon as that year is up, then they have to resubmit financials and hopefully not owe again.
Okay, so what does resubmitting financials look like at the end of the year? Like
So
if they've had any sort of income changes within the last year, they would have to disclose that, right?
mhm.
Gotcha. So in your opinion, Jay, for someone who might be struggling with tax debt on top of other types of personal debts, which of these three options do you think like is the best one? Offering compromise installment agreements or currently non-collectible status?
That's a tough question, because it really pertains to that individual at that point in time, and that's why we have the best resolution department in the industry, is because we can see exactly where that person's at and what would be the best outcome for them as well.
Gotcha. Yeah, so I guess for anyone, struggling with these questions, figuring out which option might be best for you, you can check out Tax Relief Helpers at taxreliefhelpers.com, and see what might be the best solution for you and talk to an expert to get some individualized guidance, right?
Absolutely.
Awesome. Well, Jay, why don't we go ahead and transfer over to some real questions from real people submitted to the Debt Hotline.
Okay.
First question is actually from our live chat. It's from Ben Siciliano. I'm going to go ahead and pull that up here on the screen. It says, can a wage garnishment be reversed within 21 days? So I think we're assuming that this wage garnishment is from the tax or from the IRS. Can it be reversed within 21 days? Do you have any thoughts on that, Jay?
In certain circumstances, it can be. But again, there's a lot of factors that come into play here. One, you have to be in compliance, which means you have to file the up to current with all of your past taxes, all the years before. And then you would have to get in touch with the IRS if you did not go with a tax relief company, and then try and get in touch with them to release that garnishment.
So what does it mean to be like current with your other taxes? Tax
So
debts?
up to date with filing. Let's say somebody filed an extension for 2024, but they owed for 23, 22, and 21, and they put a wage garnishment in place. So then they would actually have to try and make sure that they didn't have any additional balances. And then you'd have to go over the financials as well to make sure that you could submit that for them to even allow trying to lift that wage garnishment.
Gotcha. So it sounds like there might be a lot of red tape, a lot of hoops to jump through in order to get a wage garnishment reversed once the IRS has already started that process.
Absolutely.
But it's not impossible to get it reversed, within a few weeks.
No, it's not impossible.
Gotcha. All right. Let's go ahead and move on to another question. This one is from Jonathan in Iowa. It says, I owe about $18,000 to the IRS from self-employment taxes during COVID. I was never able to catch up, and now they've started sending levy notices. I also have about $9,000 in credit card debt. Which should I deal with first, and can I negotiate both?
I would address the IRS first, unless the credit card debt has already gone into extreme collections. At least if you respond to the IRS about the notices, then you can at least hold off until for a certain amount of time frame before they actually submit to levy or garnish you.
Yeah, and I would add to that, if you have $9,000 in credit card debt, typically credit card debt is the type of debt that will charge the most interest, the highest amount of interest. And correct me if I'm wrong, Jay, maybe you disagree, but there's probably a chance that the credit card debt's going to end up costing you more over time than maybe the tax debt would. So I do think it's important to at least engage with both the creditor and the IRS to just see what your options are. Because I think that could also delay any further action on their end. Just engaging and communicating, But if your credit card debt's going to be charging like a crazy amount of interest, it might be good to figure out a payment plan and prioritize that debt. But I do think that the IRS is typically maybe more aggressive with like wage garnishment and levies than some creditors might be. So that's something to keep in mind as well. Would you agree, Jay?
Absolutely. At that point, it's at least make contact with both to make sure that you could stop any type of collection efforts from either one of them.
Yeah, I think the key is to communicate, right? Because, you know, most credit card companies have some sort of program, or they can at least get you on a payment plan that makes more sense with your current financial status. And it sounds like the IRS will also be flexible in certain cases if you're dealing with all sorts of debt and just trying to find a resolution. But again, I would just echo what I said before, that credit card debt usually charges pretty high interest. So that's another thing to consider as you're trying to prioritize which debt to pay off, and how, like, which one you're trying to pay off faster or first. You might want to take a look at both debts and figure out which one would cost you more over time due to the interest involved. That might require a little bit of math, but again, you can reach out to taxreliefhelpers.com, or you can go to solosuit.com. We've got an AI bot trained to pass the CPA exam in the top 20%, and also the bar exam. And you can interact with that. It's called Solo, and you can interact with that bot to kind of learn more about your situation, maybe even get some help with that math. So there's all sorts of resources out there to decide and prioritize which debt you should pay off first. Okay, next question. Let's see, this one. I'm going to queue it up here on the screen. This one is from Alan in Texas. And his question is, so Alan in Texas says, the IRS says I didn't file in 2018 and 2019, but I did, just not electronically. I'm now being told I owe over $40,000, including penalties. What are my options if I don't agree with the amount?
Then I would submit for the actual transcripts to see exactly what they have on file for you. Because if they're saying that you didn't file, but you sent them in, if you didn't file them electronically, but you sent them in, and you're just now getting notices, those could be balances that are called substitute for returns, which means that the IRS filed those returns for you without any deductions.
Yeah, and I would also add, it sounds like you might have mailed in your taxes instead of filing electronically, and there's never a guarantee that the IRS is going to receive something when it's sent through the mail. So when you are sending important tax documents like that, it could be a good idea to use a special type of mail to make sure that you can track the status of the delivery of the package, make sure that it gets to the right place. Because I'm curious, maybe what happened here is maybe the IRS just never actually received your documents, even though you filled them out and sent them in. But yeah, Jay, any other thoughts on this one? Like you said, they can request documentation from the IRS to see what they have on file, but any other tips?
I would check to see if you have duplicates or copies of those returns you sent in, and then I would caveat the same thing that you just said, Hannah. Next time, if that, for anyone who's listening right now, if you do mail in your returns, make sure you send them certified, because then someone will have to sign for them, and then you'll know that they actually got them. But the IRS does make mistakes. I've seen several of our clients who have done the same thing, and then the IRS just filed those returns on their own for them.
Gotcha. Okay, great advice. Let's see. Next question is going to be from Gary in Florida. Let's see. I'm going to queue that one up. Gary in Florida says, I'm on Social Security and just found out that the IRS offset my refund. I owe about $7,000 from a business I closed years ago. Can they garnish my benefits or take my stimulus checks too?
Well, if I'm assuming that at this point in time, they're not really sending out stimulus checks anymore. But as far as garnishing your benefits, if you're only receiving Social Security, then they're not necessarily going to go after it. But if it was a business debt, I wanted to make sure that he was probably personally assessed. So as long as there's nothing lingering from the business, or there's only one source of income, then I would say at this point in time, they're not going to be really coming after you too much, unless there's something else that we can't see or we don't know.
So it sounds like Gary might be a little bit lucky in that this might not be a debt that the IRS will pursue super heavily.
No, not if he only has Social Security.
Gotcha. We got another question from the live chat from Ben Siciliano again. Ben says, does the tax advocate service generally respond quickly to avert levies and wage garnishment? So Ben, I'm assuming you mean, does tax relief helpers help respond quickly to avert levies and wage garnishment? Jay, any thoughts on that?
Well, if he's talking about the tax advocate service, because that's kind of a section to try and help people out with the IRS at times, but they're very slow to respond, specifically for garnishments. Usually that service is only utilized as far as a last-ditch effort, or trying to get in touch with them because there has been some documentation. Usually, like if you're trying to use this for a wage garnishment, it might take a while.
Gotcha. Ben, if you have any other questions, feel free to submit them. I think we'll probably start to wrap up here, though, because we are at about 1:30 PM. But Jay, yeah, I wanted to ask you, do you have any other last thoughts on like how to negotiate with the IRS if you are in a position where you're really struggling with debt, maybe more than one type of debt, and you really just want to find a resolution? Any words of advice or any interesting stories or experiences you'd like to share, where you've seen people successfully negotiate with the IRS and settle?
I have probably dozens of stories as far as that goes. I know a lot of people that we've helped out with, but in essence, all it comes down to is responding to those notifications. In essence, if they're telling you that they're going to levy you or garnish you, and you don't have the time or you don't have the documentation, you got to weigh your options here on what would be the most beneficial position for you to be in, right? Because at the end of the day, if they take, or if they levy your wages, or they levy your bank account and garnish your wages, then you're not going to be able to handle any of the debts across the board.
Yeah, and I think that a levy or a wage garnishment in many cases could be like the worst case scenario. So if you can avoid that, I think at all costs, and just communicate. Same can be said for other types of debt, like credit card debt. Don't wait till the last minute. If you've been sued for debt, be sure to respond. In fact, I will go ahead and share a link in for all of our live viewers. If you've been sued for debt, definitely want to file an answer. If you don't file an answer, there's probably a good chance that you'll lose the case automatically. But if you can file an answer and then communicate with the creditor or the debt collector that's suing you, there's a better chance that you'll be able to find a resolution, and that you'll be able to, come out on top and settle your debt. So I went ahead and shared a link. You can go over to solosuit.com if you've been sued for debt to respond to the lawsuit, buy yourself some time to negotiate, and then find a resolution. We also have a tool called Solo Settle, where you can negotiate with creditors and debt collectors online and completely digitize the process, so you don't have to wait on hold, play phone tag, do all those things that are a headache when you're trying to find debt resolution. You can also head over to taxreliefhelpers.com. Again, if you're dealing specifically with tax debt, they have an awesome team of attorneys that can help you negotiate, find a resolution, and settle your debts. Jay, any last words?
Well, at the end of the day, tax problems are stressful but solvable. The most important thing is to take action, just kind of like you said. Work with someone who understands both your financial situation and the IRS system.
Yeah, I agree. There are a lot of resources out there. Solosuit.com and taxreliefhelpers.com are two great resources to kind of help you get back on track. Thanks everyone for watching and listening to the Debt Hotline. We really appreciate you submitting your questions. Again, if you would like to submit your own question, you can call us at 801-613-8181 and leave a voicemail asking questions about debt, and we will respond to those questions every week on the podcast. And Jay, I want to say thank you so much for being our guest today and for sharing your expertise. I think you taught me a lot, and hopefully our audience also learned a lot as well.
Thank you, Anna. I appreciated the time, and I appreciated being on the podcast here.
Awesome. Well, thanks again, everyone, for listening to the Debt Hotline. Just know that Solo is rooting for you. We know that you can find a debt resolution. You can settle your debts. Head on over to solosuit.com if you have questions or want to get started with the process. Thanks again, everyone. Have a wonderful evening.